Okay, hello everyone. Welcome back to another video here. And as you can see, I have a guest. I have an important guest here, and really excited for the topic for what we're gonna have tonight. Tonight, regardless of what you wanna watch. So again, if you have not subscribed to this channel, please do subscribe. And let me introduce my friend, my new friend, Greg. Greg, can you introduce yourself a little bit to the viewers?
Yeah, absolutely. Randall, thank you for having me on. Thank you for having me with your audience. My name's Greg Holland. I'm Senior Client Portfolio Manager with INVESCO for our Growth Equities team. And the product that gets me the opportunity to make new friends this evening is we have an INVESCO Global Consumer Trends Fund that's offered through ATRAM that we believe it's a really compelling time to invest in this. And I know through the course of this interview, we'll talk about some of the reasons why we believe that, but just in a short snippet, we're capturing changes in consumer behavior that are leading us towards increasingly digital lifestyles, towards increasingly healthy and more active lifestyles, but also we're recovering from a coronavirus impact last year. That was the epicenter was consumer behavior. There's a recovery coming. We're really excited about it. But my background is about 20 years in financial services that has led me to this point where I'm representing this product and a great team based here in Houston, Texas, that's investing globally to capture these changes in our behavior.
And you've seen, after 20 years of watching this, you've seen a lot of changes, particularly since last year with the pandemic hitting the. I don't remember having a pandemic that this is in this global scale. Because a lot of people were used to compare this to the 2008 crisis, but it's really different, and it changed the behavior of a lot of people. And that investment, the one that you're managing right now, is pretty much geared towards that, because was there a massive shift in consumer behavior in the last year or so?
Oh, tremendous change in behaviors. I mean, as we've all seen in our daily lives, because we're all locked in our new home offices, right? We're all locked down in homes. We weren't able to go out and have experiences. And one of the things that benefited as a result of that were some of the long-term secular themes that we emphasize in our portfolio. Digital lifestyles, things like e-commerce, were hypercharged because of coronavirus, and we embrace that. We've added new exposures. I'd love to talk about some of those and how we've invested to capture that. But things like video games, when you can't go out and play sports, when your child can't go out and play sports, video games and esports becomes a substitute for how you can engage with other people over the internet, talking to your friends just like you would have at school, but now you're playing a video game with them. And sometimes you might be playing a different video game with them. Digital lifestyles really hypercharged as a result of coronavirus. But he mentioned something else that's really important. This wasn't like anything else. This was an exogenous shock. This wasn't an economic drawdown or a supply or demand disruption. This was an exogenous shock on our behavior that caused a recession. But we are now about to rally out of it as we're looking at vaccines that are going to unlock some of those behaviors that, if they're not long-term shifts, we all want to go back outside and play and have experiences again. And some of that's going to unlock, and we're excited about, and have some positioning for that as we move out of the back half of 21.
Even that going out, I think it's going to be delayed beyond our expectation. So I guess even you thought that by this time we're going to be back to our normal selves. I see you're still working from your home, and even if say it's okay, we open up the economy, and every time we try to open up the economy, the spikes go up and stuff like this. So I guess it's going to change certain things that are going to happen, like even the whole concept of work from home. I mean, guys, especially in the US, that's an alien concept for a lot of you. I know a few years ago they started in Singapore because of the expensive rent and everything, but now the work from home is like it's here to stay. And even education. My kids were homeschooled, growing up, and people thought we were kind of weird people because we homeschool their kids, and now it's like the norm. So we now see an investment that kind of captures those things. People staying at home more, or shifting from the retail, I know the Americans love their malls and stuff like this and outlets, and now shifting to more a digital space, and even entertainment. It's kind of, you see how much subscriptions I have now. Entertainment, okay, all these streaming apps and stuff like this. So I guess you're now trying to capture those things because of the shifts in consumer behavior.
Yeah, no, you are spot on in that a lot of these shifts have been happening for a long time and they've accelerated.
Yeah.
You're also, it's noticeable that We thought things were going to reopen faster than they have, but if we flash back a year ago, most people were thinking we're not even going to have a vaccine for 2 years or 5 years or 10 years. So we're really fortunate to live in a time where modern medicine and mapping the human genome and being able to take a virus like that, we've produced as many vaccines as quickly as we have. It's not going to be a straight line. There's going to be spikes. There's going to be drawdowns. But there is enough vaccine to go around where over the course of the next, let's call it 3 to 6 months, in aggregate on a global scale, we are going to really start to unlock some consumer behaviors on a global basis. Now, there are countries that are right now going the opposite direction. Our friends in India are headed the wrong direction. Brazil still has very high cases. But if we look at, let's say, Israel as an example of a country that was very efficient in getting people vaccinated and getting people back, and if we look at the trends that we see there, we can see there's pent-up demand for a return and an unlock. And right now there's a lot of, we could call it tinder or dry powder sitting on the sideline that people are ready to go and spend and have activities again. But digital lifestyles, I'm talking about, those are the consumer experiences as we unlock. These evolutions towards digital lifestyle, things like online dating, things like e-commerce, and what you just talked about before, increasingly working remotely. This is changing the valuation of real estate here in the US. It's going to change it around the world, both for corporations, how much they pay for rent, and also for homes, because people are buying second homes at a rate that we've never seen here in the US because they want to work remotely. They're willing to commute 3 or 4 times a week, but they weren't willing to do it 5 times a week. So now they're willing to move further away. All of that's changing valuations. It's changing home improvement. It's changing a lot of different things, but that's what we try and focus on, is how are these shifts going to be and what's going to be more permanent and structural in our behaviors, because that's where we can find something powerful to invest in for our investors, that we can capture longer term shifts that will be able to deliver value and ultimately unleash the power of compound earnings for our investors.
Okay, let me ask you a few questions, guys. What would you think would be the top 3 major shifts in consumer behavior given by the pandemic? I know there's a lot.
I will say, number one, e-commerce. And this, if you would ask me what's the number one shift in behavior that's happening 5 years ago, I would have said e-commerce. And if you ask me 2 years from now, it's still going to be e-commerce. So let me give you sub pieces, Randall, of e-commerce that we're excited about, how we think about that, and then I'll throw out a couple of other ideas. But within e-commerce, we know that there are these big platforms that can offer you almost any good that you want. What we've focused in more on within coronavirus and what we see accelerating, we're looking at really big vertical markets that are currently underpenetrated and just started getting penetrated. And the number one of those that we like is food and consumables. So if you think about food and consumables, let's just dumb that down and say it's groceries.
Yeah, because people will still go to the groceries with the, you do Amazon, but you still do your groceries, right? And stuff like that.
You've got it. So if you think about groceries, it's about a third of your consumer spending. And if you think about that trip to the grocery store, like you said, everything else is locked. But if you're trying to get into the grocery store, if you finally, every Sunday I go to the grocery store and I pull out my mobile phone and I pull up my Alexa app and I check off eggs and I put eggs in the basket and I check off milk and I put milk in the basket. But one day, I'm a late adopter, but one day, someday in the future, I'm going to take my Amazon Alexa app and I'm going to just have all the groceries bought and sent to me. And then that's going to become a $150 purchase that I don't make in a store that week. And it's going to become suddenly a $150 high quality recurring purchase that I'm now doing online every week for the rest of my life until I die.
Yeah.
And that also means I'm not going to the grocery store, which means I'm not going to stop at the fancy dog boutique shop next door and buy my dog like a really expensive dog treat. And I'm not going to make all the other trips that I normally do when I go to the grocery store. It becomes cyclically reinforcing. And what we saw in coronavirus is we moved from grocery penetration was like 4 or 5% penetrated for people buying groceries online. That has doubled and then tripled. And it's actually, even as economies in the US have started to unlock and in Europe have started to unlock, it's remained elevated. The checks for the fourth quarter showed 15% growth year over year for the fourth quarter in groceries as well. So high quality recurring revenue shifting online. That's one area. Two other areas of e-commerce: luxury goods. We've invested in a couple of platforms that have, well, actually the one platform that's basically become the global leader for e-commerce online for luxury goods. We've also invested in a competitor that is coming that has some exposure that's primarily European. And then the third area that's big, that's just started to move online and accelerating is actually cars, buying a car online.
Yeah. No more car salesman.
If you think about it, most people, and I can't speak to what it's like to buy a car in the Philippines, but I can say that most people don't actually enjoy going to a lot and shopping around and having to engage with a salesperson.
Yeah.
It's one of the less enjoyable purchases people make. $841 billion a year market. It's actually bigger than groceries, less than 1% penetrated. And so we've added some exposure to that. So we've got three really big markets that are still early in e-commerce, in groceries, luxury goods, and in autos. But broadly, that's the number one area of change, if you want to talk about things that are shifting.
So e-commerce it's changed the behavior, right? I mean, I'm a dad of 4 kids, and now just 2 because 2 of them are married now. I love the groceries. Like a weekly grocery, but I end up spending more than I should, like those non-intended purchases along the counter and stuff like that. And now, because of the pandemic, I'm now using an app, which I never thought I would. I mean, I'm still getting the hang of it and stuff like this are more. And I just wanted to ask, and you said the cars, because I know Americans love their cars. I mean, very different exposure in the Philippines, but I think prices here are more stable. Doesn't shift so much from one place to another. But again, I've seen that. So I guess, it's not just Tesla that you buy online, right? Okay, and stuff like this. So are you also seeing certain changes in a more different economy, like a smaller, growing economy, emerging economy? Do you have some studies to show certain shifts in, say, China or India or more emerging nations, or I mean, China is big, but the others, and they can be big. Like Indonesia is big, India is big.
What when we step back and think about why the Global Consumer Trends Fund is why it's such a great time to invest, it comes down to we're in a period of disruption.
Mm-hmm.
Because technology and technology-enabled business models are enabling us to change. They're enabling, changes to how we shop and where we shop, how we consume our media, our information, and our news. These are all changing because we're increasingly connected all around the world on a mobile basis. We have mobile phones now. That means everyone's connected, and we're connected more of the time too, which means we have more time for spending streaming music or doing things, consuming that type of media. But what is exciting for us, I think, that is unique, the team that I represent averages 27 years of investment experience on average. In our time frame, it is unique to find shifts of this scale that are global in nature.
Yeah.
Technology has removed the boundaries. These shifts are happening across geopolitical boundaries, across geographies. The same shifts are happening in the Philippines as they are in Houston, Texas right now. And that's unique. To be able to capture within an investable time horizon shifts that are happening on a global scale this doesn't happen. Normally they happen in one country, and then 5 years later it kind of moves over here, and then 10 years later it happens over here. This technology-enabled disruption across boundaries is unique, and the size of shifts we're seeing happen, they're happening. We may be to use a baseball analogy, we may be in the 4th or 5th inning. So we're not quite halfway done, but this is a shift in scope globally that is not once in a generation, but probably once every several generations in size. We've not seen a disruption like this in modern times.
Yeah. And
point being, it's happening everywhere.
Yeah.
We're finding global leaders.
Yeah, it's happening everywhere at the same time, with probably the same scale, and some reasons more or less the others. So I guess technology was a big factor in all of these things. Let's talk about financial stuff. And now you see there's money to be made here. Now, pretty much, I mean, you see this shifts, like e-commerce shifting from, and we've seen the shift from, traditional brick and mortar retail to more of these things, but the scale is the one that's different. So now You're seeing shifts in retail, shifts in consumer preferences, and you think there's money to be made here. You think this, this the stock price of these companies will now begin to grow faster. Plus the fact, I think we need to understand that because of the pandemic, so for some reason, like you said, a lot of people have dry powder here, and just itching to invest somewhere. It's just way too much, and we can't just keep on putting in treasuries and stuff like this.
Yeah, there is tremendous opportunity, and I think one of the advantages that we have as long-term fundamental managers that are modeling businesses, and we're modeling out, building our own models for that business for years in advance. That's a perspective that the market doesn't necessarily take. The market tends to be short-sighted. So if you're looking at a business and you're modeling out, for our example, Amazon's business for the next 10 years, we may not be exactly right about what the 10th year looks like, but we have a much better idea based on all of our engagements to surround that business than the market does and what the market's embedding. And when we look at that, for example, is a business that people might say, oh, the stock was up, I don't know, it was up 74% or so last year. Well, it's actually on a PE basis, half as expensive now as it was a year ago. And it's less than half what it was 2 years ago. And the profitability is ramping tremendously. So it's having that long-term view of understanding how their margins are going to improve, finding and basically modeling what's their operating leverage over time. It's not just seeing growth and investing where growth is. We looked at an e-commerce business that just came public. It was an Asian leader. It will be a fantastic company. The company will grow for a long time, but the valuation of that business when it came out as an IPO recently was it was exorbitant. It was too expensive. And so we chose to pass, and we'll watch that business. And when there becomes a point when that's a company that the stock price pulls back and we look at what the profits look like for the business over time, that may be something we can make money in the future. And we'll stay engaged with the management team, but it does matter what you pay for an asset. And we have a portfolio right now that we feel is actually very attractively valued for the next 2 to 3 years.
Okay. So Greg, also you're saying pretty much a lot of these things are you're positioning, you're looking at the model. So basically this is one of these investments that you really have to look at it from a long-term perspective. This is not something that I want to quick make money. I know there's growth in consumer trends and technology stuff, and I put money there and pull it out next year. Pretty much, I'd like to echo that this is a kind of an investment. But basically, most of the pool funds are designed that way anyway. You have to have a longer perspective. So you're talking about 7, 8, and maybe even 10 years to see this. I mean, to get the best value, the best growth out of this particular investment, you have to be willing to wait. Is that what fund? Is that a good concept for that?
Having a long-term mindset is the number one way to not go crazy, and 2, not try and second guess yourself into timing things incorrectly just from any kind of perspective. Now, in our portfolio, there's some businesses we'll invest in and that we may own for 2 or 3 years, and we might decide to sell it after a couple of years. We might get it right or wrong earlier than that if something goes wrong with the business. But what we try and do is we try and put together a package, a portfolio, a fund, that the entire package, when we average everything together, is giving you, it's reducing the risk. It's the only free lunch in financial services is diversification. So by putting together a diversified portfolio, we're giving you something that you can invest in for the long term. And the overall package characteristics are something that gives you higher growth in the market on the top line, higher earnings and profit, basically higher profit growth on the bottom line. And when we look at what you pay for that growth in our portfolio, you're actually paying less for higher growth than you would be if you were buying the MSCI Consumer Discretionary Index. So by doing deep research and taking a long-term view, we put together a package that, to your point, that somebody wants to hold on to for the long term.
Yeah, and I like the concept. It's global. I mean, we're not just tracking the US here or Eurozone or even, we're talking about a global trend. So, I mean, there's a lot of this flexibility, being a nimble to shift, because we've seen these things. So what I think what we've been seeing right now is we're even seeing global corporation coming out, not from the US or Europe anymore. So again, China being one of them, and the others also, and maybe the emergence of Japan once again. So this is a perfect investment for us to be able to capture these things, and pretty good for us retail people. I mean, us non-investment savvy people that we just put money there. We you know, it's a diversified portfolio. So guys, saying is, if you have a few thousand pesos, you cannot diversify globally, right? I mean, you know, no matter if you want to do your DIY, you can't diversify. You won't have access to. But in this particular fund, you can. You can. You know, it's something that you can put your money. It's great. Uh, Comparing. Let's just talk about more practical advice for our listeners right now. I guess, you know, most of these experts will offer just invest in the index, you know, and stuff like this. And now we are like there's a fund that totally goes against the concept of the index, and it's a different index, but different concept. I mean, what would what would be my primary reason for even to put money in an investment like this, aside from, you know, there's going to be growth and stuff like this?
Sure. Well, there's a number of reasons. I would say that one would probably be this fund has long-term investment themes that people recognize in their own lives. And I would say that one of the reasons that we've had such success with this fund around the world is that people do recognize these trends in their own lifestyles, and that gives them an affinity and a comfort with understanding this is something that you know, I can stay invested in. And I think that helps.
Yeah. So when you look at this company, it kind of makes sense to you why you see that. Because, hey, I'm using that. I'm about to use that. So it's something, and it may not necessarily be part of your S&P and your, you know, and your Dow, but it's something that I can use, and something that's can grow.
And being active, you know, being active allows us to outperform. So when we have a big change in the economy, like we had last year, where, you know, economic growth changes, where cyclical businesses at the beginning of the year look horrible. Well, we reduced our exposure in order to protect investors, and that helped us protect as the market was going down. And then because we had some pretty significant engagement with one of the vaccine developers through some investments we had in our diversified portfolio, that gave us confidence to begin in a year ago, basically in March and April, to start adding back cyclical exposure in the portfolio. And that helped us outperform in the back half of the year. So that's what being an active manager can do. But, you know, Randall, you mentioned something, and I like to try and make things relevant to an audience. Your investors probably are pretty familiar with buying things using Shopee, using Lazada. I mean, owning our portfolio is giving you something that is, you know, they're regional stocks, but by owning Sea Limited, which we've owned since its IPO, and it's been a fantastic, you know, performer for our portfolio. We get access to Southeast Asia. We're getting to your question earlier of looking around the world for opportunities. We are looking for global leaders, but within big trends and things like e-commerce, we want to make sure we're capturing the big leaders. So we've got exposure in Latin America to e-commerce, exposure to Southeast Asia to e-commerce, to China specifically, because China is kind of a closed market, right? They protect their companies and they protect their consumers from other companies competing as much. So we have to invest directly in Chinese businesses to capture that consumer a little bit more directly. But in aggregate, we want to invest in the Netflixes and the Amazons who are, you know, they're doing this, in Sony, who's streaming music to you and video game content, who's selling this around the world and capturing these changes with everybody.
Yeah, great. That makes it really a truly global exposure. You know, it's not just the companies that are global, it's the consumers and stuff like that. And it's great. And there's an opportunity for us. I mean, I love it. I love this. Just for transparency, I've been investing in that particular fund as myself, and I've seen certain growth. Okay, I've seen that. One of the things that when I was tracking and studying these particular funds, recovered faster from the declines, way ahead of everybody else. I mean, they're like, you know, anything that has something to do with technology or disruptive or, you know, consumer trends, they were growing, they were recovering faster than everybody else. And I guess that has something to do with, number one, people who always have money to invest, they just choose where to invest to. Second, the shifts. I mean, we want to be able to capture. And finally, there's a active and not too active because it's a pooled fund, but active in the sense that, hey, you have guys here who've been trying to look at certain opportunities, who have the machinery to make these researches, the exposure for them to be able to do that. And we're just gonna ride. I mean, as an investor, I'm just gonna ride. I mean, you know, yeah, I wanna buy my own stocks and stuff like that, but just just too crazy. I mean, you're Filipino. I want a good exposure in many countries. How can I do that? And I get, if you look at the stock market in the US, just way too many things too many things to study. So it's good to consider certain funds and stuff like this, particularly this consumer fund that we're talking about, because as you see, I mean, a lot of people have been shifts it. It's not just e-commerce; it's many things. I was reading somewhere even businesses that deals with pets are all like on the rise because I guess people have more time now to be able to take care of pets and stuff like that. And that's something you want to capture also. I mean, because like in the US and Europe, that's a big business for them. Yeah.
Yeah. In this portfolio, we actually, it's ironic. There, you are spot on. Pets is good money, and there's lots of money going there. When we invest in this portfolio, we look for one of two things, and that is we want the consumer to be, we want the business to be driven by a consumer decision. How do I spend my time, or how do I spend my money? And that goes for all the stocks we have in the portfolio. So there's some things that we've not put in the portfolio in the past, and that could include like digital payments, which is a fantastic group of stocks. These are great businesses. We own them in our diversified portfolio. We've chosen to draw a line and say, okay, they're not consumer only stocks. A lot of it's driven by enterprise or business to business spending. Pets probably could fall on consumer, but we've not put pet exposure in this portfolio. But that doesn't stop this from an interview from saying, yeah, it's been a pretty amazing business. You know, I heard a great anecdote. One of my colleagues, we were having a team meeting at the beginning of the year. And one of these things to spur conversation, and everybody was asked, what do you think will be one of the #1 surprises that happens in 2021? And I thought this was hilarious. She says, you know what, in 2021, we're all going to be surprised because all of our dogs are going to start talking because they've been at home listening to us on Zoom calls the entire year. So dogs are going to start to talk in 2021.
Yeah.
Anyway.
And we're seeing more cat people rising now. So okay, so those are the things that are going to change. You want to be able to at least just confidence that you invest in a particular fund that would capture these things. Now, okay, let's just be a little bit more practical. I'm a young guy. I'm a millennial. You know, I'm just starting to have a little bit more of money, and I want to get into this investment. Pretty much that this particular fund through ATRAM is targeting this young mobile app-driven people. Okay, they something that they can be able to do. How much exposure should they put their money into? Let's talk about percentages. If I have 100% investable amount of money, how much should I be putting in a particular fund like this? What will be a good recommendation for my, from an expert like you?
I'm qualified to talk about the portfolio, but I'm not qualified to tell you your allocation that should go into this. Of your equities, I would love to see it be 100%, but I think from a compliance perspective, I'm not allowed to say that, but I would say that this is a diversified global portfolio. Yeah. It's going to have a little bit higher risk than if you invested in an index. It's an alpha driver for your portfolio. So this is something that you should expect to grow your portfolio over time, but probably do so with more volatility than just a benchmark, than an index would. So that's the guidance I can give you. Now, for a millennial, Randy, I would say this. As I mentioned, I think one of the reasons we've seen tremendous sales in this that go along with the performance, I think it resonates, these behaviors resonate with some of our younger investors as well. The online dating, the video game, esports exposure that's inside the portfolio, the care for the environment, to be quite frank. We're migrating, we're adding electric vehicle exposure, autonomous vehicle exposure in the future to the portfolio, ride sharing. There's a lot of things that align with their beliefs. We also have some sustainability in how we look at luxury goods and keeping things being reused online through the economy. So there's a lot to align there. As far as a specific percentage, I would love to say 100%, but I have to leave that to the financial professionals. Our friends at ATRAM are probably better with
okay,
that.
I'd probably say no, but I'd like to put a little bit more. I guess there has to be a big percentage of your portfolio to be allocated in stuff like this. And yeah, like, a lot of people talk about the index, but if you're young, you still have enough time to see whether it's going to grow. I have this anecdote that they tell people: if you're a young guy, you're a millennial, go ahead and have a higher exposure in in equity-based investment stocks and everything. Why? If you lose your money, you still have parents, right? So that's not something I can use now. Okay, so, okay, you still have a lot. You still go home and you save a lot of money and live off your parents' house. So those things are happening right now. And we've seen, and at this game, maybe this part of Asia, we've seen a lot of this, because I know in the US and stuff like that, at a certain age you want to get out, but the Asian context is a little bit different. They still stay with their parents, and guess that's why they have more money to invest and stuff like this. Are you seeing that trend happening in the US now?
What we've seen is we have seen people staying at home longer. That has started to change. And in fact, millennials are forming households. They're just doing it later than previous generations did. So they are moving out and they're starting to unlock that spending power. They're really starting to be the drivers of the global economy. Demographics are a big part for us.
Yeah. They don't wait to get married and start a family before doing all of this capital spending, as we say.
Yeah. Right. Yeah. They're racking up their subscriptions before that.
Yeah. That's why we're listening to guys like Graham and those guys in YouTube who are doing so well right now. So I guess it's a shift. It's kind of crazy I'm much older than you. It's like crazy, the shifts and everything. And now you can capture that shift in funds like this. So thank you very much, Graham. This has been a wonderful session. And we're going to talk to a particular fund that's being handled by ATRAM. But you know that this is a global exposure. This is being managed by guys from INVESCO. The speaker is from Texas and stuff. Are you eating more meat now or less meat now in Texas because of the pandemic?
We're eating healthier all around, just like everyone else in the world.
Texas. Even in Texas.
Even in Texas.
Okay, that's the shift. That's a big shift. Okay, your ranchers are not too happy now. Anyway, so well, healthy beef, if there's such a thing. So those things. So you guys from the shift, this global shift, you can take advantage of this. You should add on to your portfolio personally. I know Greg. I know Greg cannot say, but I can tell you that you can put some exposure to these things. I'm not telling you to put all your money, but you need to be able to put. And even if you're not very young like me, I still put in these things because I'm just in my mid 50s. I still have a few more years to invest, and this change is happening right before our eyes. I guess the change in the last year is greater than the change in the last 5 years among many of these things, or maybe even 10 years. Because everybody's talking about e-commerce since the early 2000s and stuff like that, but never in this scale did we see in such a short period of time. And we're just talking about e-commerce, just many things disruptive and stuff like that. Just last question, Greg, this fund, how different is this fund from a particular technology-driven fund? And because the other funds that we're trying to encourage people is also to look at the technology / disruptive. A lot of this deals with technology, but how different will this be from a technology-driven fund?
That's a great question, because there are a lot of tech-enabled businesses, right? People think of an Amazon or an e-commerce business as a technology business. But in reality, if you look at a tech fund where the majority of their holdings are in the technology sector, it is very different, almost 0% overlap. We actually have one tech stock in our entire portfolio. Okay. So of our 75 holdings, we have one that is in the tech sector. So they end up being very, very different types of portfolios, different types of exposures, somewhat complementary. And I would say there's a lot of innovation happening in technology as well. We just like this portfolio is about finding the innovation and changes in consumer behaviors and on a global scope.
So this fund would do well with the technology fund. If you're young and you want to see some growth, you're willing to wait, you don't mind the volatility, because if you don't like the volatility, you stay away from funds like this. But if you're okay with the volatility, guys like me, we eat volatilities for dinner. I mean, I grew up, I finished the late 80s, the 1997 Asian crisis, the 2008 global crisis, the 2020. So this is part of the investment portfolio. If you have a long-term view and you are something that can take the volatility, but there's a lot of growth that you can see. So thank you, Greg, for this interview. This is going to be for a Filipino market, but we've been trying to encourage, and thanks to my friends in ATRAM, we're trying to, and you see, even the way this investment is going to be sold is changing the consumer trend. It's going to be through a GCash. It's going to be an app that you normally would use to pay something or to send money to a friend or to a loved one. But now we're using it to invest as well. So it's groundbreaking. It's groundbreaking. It's one of those shifts in. I mean, I grew up in the financial services. We've seen the shifts towards the digital space. I mean, we're a little bit delayed, but we're starting this already, and even that is a shift. And now you have access to it, and I know if the guys in ATRAM have told you how ridiculously low the entry point for this investment. You can actually buy this particular investment for 1,000 pesos. That's less than $20. I mean, yeah, more or less about $20. I mean, I don't think you can do that from any perspective, and now you can do it. So there's no more excuse for us to be able to do. Final words, Greg. How do you want to encourage our investors to consider this particular fund?
We are looking forward to a great year. It's going to be another year to be active. We feel good about our portfolio and how it's positioned. And just really briefly, if you want to think about this, the low-end consumer has stimulus coming from all kinds of governments. The high-end consumer has a wealth effect globally because they've got more money in their market account. Their house is worth more than it was last year. And all of that is waiting to be set on fire and explode.
This rich people
all of it's ready to go when we have vaccines.
Yeah. And Greg, these rich people can't spend their money, so they want to bring it somewhere else.
They want to go on a vacation. We got some of that in the portfolio too, some leisure travel. So
even that vacation is going to change. The vacation of the future is going to change. All right, and stuff like that. So thank you, Greg, for this wonderful, short. I'm going to be showing them. Hopefully that you're going to be learning from something. And thank you, Greg, for gracing this. And I know this is different time zone, but I want to really appreciate you taking part of this interview. Thank you, Greg.
Absolutely, my pleasure. Thank you for having me on. I appreciate it, Randall.
Okay, so can I bring in DJ? DJ, let's talk about your product again. So okay, so DJ. So again, this is one of those products that you guys are. First and foremost, no, Tagalog na ako ng konti, no.
Okay lang, go lang.
I guess you guys really change these things, and really looking forward. I'm actually tracking even the behavior, no, for our investors are beginning to change because of you coming into the GCash environment. So, you're groundbreaking, guys. Parang and we're beginning to see people warm up to this idea. Were you expecting this kind of perception, the shifts, DJ, or were you guys surprised also?
I'll answer it two ways. Yes, as a product manager, parang it's my job to be able to anticipate these shifts. Parang what we saw this fund to be perfect for the GCash market. We felt that this will be something that our generation, the millennials and younger, the ones that are just entering, coming in, diba? I felt that this is the perfect type of fund for us. Parang full disclosure lang, I was an esports athlete before, an athlete as we call it. So personally, parang I resounded with this fund, with the video gaming aspect. And parang coming off, I have nephews who are about 10 years younger than me as well. And I see their exposure. I see what the trends that they consume also. So parang when we saw this, this is the fund that will really reach out to this generation. But we're still overwhelmed. We've seen like 3 weeks worth of flows in this fund, and like, wow.
You've never seen that kind of a flow.
Very positive flows from, a source that we didn't know, would be this way. Parang we have hundreds and millions. Don't quote me on this, but I think we had like 40 to 50 million pesos every week on these global funds.
On GCash, imagine.
On GCash, yeah. 50 well, for this one, 1,000 pesos every, like for example, for these funds, but those build up to millions. So
Yeah, yeah.
amazing.
And this is a perfect example of shifts in consumer. Guys, we've been in the financial service for all these years. We know that there's a lot of money to be made, a lot of this opportunities for the retail. I mean, the mass retail, particularly for us Filipinos. Right? Because I know ATRAM has been big with the institutions, but we've been trying to get to capture the retail because we know that they invest longer, they're more loyal, they're easier to talk to, they don't shift. But how to get to them was a challenge. So now with this GCash, you're like, prop ups to you guys because a lot of the other companies waited too long to do this. Now you've proven the point that hey, there's a lot of, and we're just starting. We're just
Thank you,
starting.
thank you.
It's not like we're just starting. You'd be so. I mean, you guys should be surprised. I got invited to a. This is initially initiated by just investors. It's a GInvest community in Facebook for these people. I thought it was done by you guys or done. No, GCash and
What's on?
it's theirs. I mean, people are now owning it. People are now exciting. And now that we're talking about this, and just to tell you, people are asking me, Randall, when are you going to do the video on that consumer and that tech? I said, it's on the way. It's going to be published already. And now we're actually shooting this. So these things. So again, it's the same. Okay, we talked about DJ in our last video. We talked about tech, and now we're talking about this one first. Is this something that I need to choose? Either I go tech or this thing, or maybe I can alternate. What would be a good strategy for investing in this global exposure funds?
Well, if you look at the exposures of the tech and the consumer trends, you might think they're actually very similar. Both are related to tech. Tech disrupts,
I guess people
the
think
way we
that way,
consume.
right?
Yeah. And if you look at the stocks, parang, wait, isn't Amazon a tech stock? Isn't, ano tawag dito, Netflix a tech stock? But they're actually not in that category when you look at the classifications from an investment standpoint. They're in different sectors. And what differentiates really the Global Technology Fund from the Global Consumer Trends Fund is that the tech fund focuses on what are the advancements in technology, whereas consumer trends, what are the changes to the consumption because of technology.
Yeah.
So
So
one is the driver.
Yeah.
One is the driver, and then one is the end result of all these technological advances. Parang
Yeah, I know you're not supposed, but I will tell people that's why it's a good idea to have exposure in both. So that's a whole concept. You want to be able to be exposed in both because they want to have similar behaviors. I think we're seeing in terms of the growth patterns, they have similarity of behaviors, but they're gonna at one point in time they're gonna be diverging as well. I mean, I guess the way I look at it, maybe in the future there's gonna be because consumption is very important for the economy and all these things. They might shift somewhere along the way. Maybe in the next 3 or 4 years, we might see some shifting of performance, and that's why it's good to position to be in both. Okay, so
I think you're right. One thing that we're seeing also with our friends in INVESCO and the way they're managing it is that, yes, because with the pandemic, tech is very important. You're seeing a lot of digital life themes in the fund right now. But, it's not always going to be this way. That's not going to always be the trend. And we would like to emphasize that because it is a consumer trends fund, you would see that there will be shifts in the way our consumption behaves and the fund will follow. In fact, if you talk to me last year, we would have said that the digital life theme is around 70% of the portfolio. Now it's around 67% of the portfolio. It's lessening because a lot of people are now looking at going outside, going to, the movies, hoping to go out, hoping to go to restaurants, hoping to go to all the places that they wanted to go to that they were hindered from because of the pandemic, diba? So that kind of trend, it's starting to come out. It's starting to rejuvenate itself. Parang lalabas na ulit mga tao. And that's the kind of forward thinking the fund has.
Except if you're from the Philippines now, so baliktad.
Oo nga eh.
Tayo, bumalik tayo ulit sa loob.
Yun nga eh.
That's why it's good, no? You don't, kasi here's the thing I want to tell a lot of guys watching. You don't just look at the perspective of we have here in the Philippines, because now there's a whole globe for you. We might do things differently here. We might feel, you might think that, this is gonna take a longer, and maybe take a longer time for growth. But we also look at where the world is going to. Some of them are really opening up. They're really countries that are more, not back to normal, but way more normal than we do. And you have to, as an investor, you have to start looking at those things. You should, I guess, also those mga nananawagan ako, let's not have a micro perspective of things. The Philippines does not represent the whole world, right? So there are things that we do here, but I say there's still opportunities here, but you can also begin, you can now begin to see some form of an exposure by investing in funds like this. So clear lang ha, I'm not, this is not a paid video, or I haven't built ATRAM for this. No, I'm not. It's not a paid video. It's not also an endorsement, but I'm a fan. I'm a fan of these products, and I think people should, put this more into their portfolio. Like I have been investing in, ever since I've been doing this, I got exposed to this thing. I was a big fan of the technology fund. I didn't know the consumer fund. You guys in ATRAM have so many funds. Okay, anyway, I didn't know about the fund. Had I known about it, I would probably put money there. But now it's shifted to GCash. It's even easier for people like me. I mean, I don't have to go one-time thing. It's so easy. I mean, so guys, you can either go to Seedbox or you can go to GCash. So these are options. Even buying these funds now, you just have to go online. And GCash made it even more easier. Okay, and then for those of those, kung hanggang ngayon hindi nyo pa alam, 1,000 lang po ang entry level nito. So you put 1,000 pesos, you have an earning, say 20,000 pesos. Maybe I can put 1,000 pesos here and 1,000 pesos in technology. That automatically is about 10% of your money that you are now investing. Okay, so you take a look at these things and you do it on a more regular basis. Guys, 1,000 is the entry level. Pero wag po kayo umasa na yung 1,000 nyo, magiging something substantial. Okay? You need to keep on adding. You need to keep it more regular. It has to be part of your lifestyle. Investing is something that you need to do. And now it's easier. It's easier for you to do that. Just an update lang. No? So, you say 80% are more exposed to the global markets. And it's funny, because the Philippine investments are cheaper. 50 pesos you can get into. Dito 1,000, and yet more people are now going towards a higher entry level. Is it because, well, number one, maybe for the longest time, a lot of Filipinos didn't know that they can invest globally. Okay, and it was not accessible for them. I mean, even for me, it was major challenge for us. But now they can do it, and also say that, ano ba yan? Is that they're seeing that, teka, wala mo na mangyari sa Pilipinas, global muna tayo. What are your thoughts here, DJ?
Ang dami kong thoughts. I'll start with this. Parang a lot of people, especially now, very relevant. We just came from ECQ, diba? Diba?
Parang ECQ. Okay, we're now in another form of ECQ.
Yeah, and parang a lot of people, when you see it, they saw a lot of cases. So people are very scared now for what's happening in the Philippines.
I am scared. I'm supposed to be in Boracay ngayon.
Oh, sayang.
Yeah.
And medyo nakakatakot, diba? Parang if you see how many people are getting COVID, I see it on my feed na parang, hey, this guy that I know has COVID.
We know these people. I mean, last year we didn't know these people getting COVID. Now, it's very close to home.
It's very personal now. Yeah. So I think the fear level, it's really big, and medyo minalas tayo in the Philippines. We got the typhoon noong November, so we have inflation, so it's becoming even more difficult. I think people are also feeling the brunt on their businesses. If they're entrepreneurs, diba, mafe-feel nila na, ay, yung kita ko hindi na rin ganun kalaki, parang earnings-wise, baka negative na yung growth ng earnings. And people who are investing also see that in the companies themselves, diba? So I think that fear level allows people to say, okay, maybe we should look at different shores. Yeah. Medyo wag muna home bias na believe in what's happening in the Philippines. That said, diba, parang we could only go up in terms of the Philippine markets. I think the second thing really is we don't have access to these things na we spend on di ba? We spend on something like Lazada or Shopee. Di ba? We spend on e-commerce, but that's not gonna be in the Philippine Stock Exchange
Yeah,
Index.
yeah.
Di ba?
Or
That's on this one, di ba? Oo. We
as a parent, we spend a lot on video games as parents, not for ourselves, but for our children.
Yeah, exactly, 'di ba? So, video games that are spent for your children, ako for my nephews, that kind of thing because you're spending on them might as well earn from that as well. And video games, there aren't a lot of video game companies here in the Philippines. And it's not also on the stock exchange, 'di ba?
Yeah, okay.
So, if you want to be able to invest in the video games that people play, lalo na the kids play, this is one of the ways that you could, earn from something that you're already spending on. And we use that tagline here in ATRAM, earn from what you spend.
Yeah.
Kasi,
And this is perfect fun for it. This is a consumer fund.
diba?
You're spending on that. So mukhang nahinga ka na ng pera for Roblox, no? So, nahinga ka na ba ng pamangkin mo ng dito Roblox money?
Oo nga eh. Sinasabi nila, Tito, get me a Nintendo Switch Online account. Okay, safe. Okay, inaanak naman kita.
So these are the shifts in everything. So, tama na binanggit ka, DJ, no? It's a good, I want to just sudutin ko lang ng konti. For the longest time, as local investors, we have a local bias. We have a home bias. I mean, we love our companies. We love JFC a lot, and all these things. We put in too much faith. But now we're seeing that, teka. I think baka sumobra yung bias natin for locally grown companies. Now, there's also a global, I did another video with a guy named Chess, who for the last decade, he's been telling you Filipinos should now have a global exposure. And, people didn't really want to listen to him that much. But now it's proven that, hey, teka, because I guess TJ also economics, so for the longest time, we were insulated because we were growing like crazy, diba? For the longest time. And now we're seeing, teka, vulnerable pala tayo. And now there's an opportunity. So, number one, nag-shift na yung biases natin, nare-realize natin, teka. Yeah, these are still companies. I still invest in these companies, but maybe I need to have exposure outside. And second, thanks to you at ATRAM and the GCash environment, now we have access to it. Now it's easy. Now we can now do it. Now I can just, once I set it up, I do my nod and whatever, I can now commit, and I don't need even to commit a lot of money. I just put 1,000 pesos. Para lang reminder lang sobrang liit ng 1,000 pesos. Okay, I know all of you listening here, you can actually invest more, and don't just limit yourself to 1,000 pesos. Maybe you do it on a weekly basis or something like that, and then eventually you build it onto this thing.
Yeah, kahit 1,000 pesos every week.
Yeah. Yeah. Yung recommendation ko, hindi pag ginagawa ay auto.
We're talking to them. Let's see what we can do.
So again, us investing the way we do things, what ATRAM and GCash did, that's a shift in consumer behavior. Imagine mo, you are investing in companies that are capture this consumer behavior. Like sila DJ heavy on e-games. Ako, grocery. You see the age difference. But we're both using, it both shifts. It both shifted. Diba? Nag-shift tayo. I mean, I never thought I'm gonna buy groceries on an app. Never.
Same.
Even last year, I wasn't willing until this. This is scary already.
Last year, I didn't have it on my phone.
Yeah.
Yung mga apps na yun, mga Shopee, Lazada, and of course, mga Metro Dealer, local apps.
Yeah, DJ, you're now aging also, so that's part of adulting now in your life. So that's gonna be part. But again, so these are the trends are happening. Take advantage of these things. For those of you watching, people have been asking me to talk about the good consumer trends. And we had a great interview with Greg, and now the product itself with DJ. Take advantage of this. Ito sa akin try it out. I mean, put a few pesos in it, few thousand pesos in it, and then you just wait, and then and I don't know. And this is something I can say. I know the other guys can say. I'm a big fan of cost averaging, especially on stuff like this. Not because cost averaging is the best investment strategy, it's a very functional one. I mean, money that you don't invest is money you end up spending anyway. Okay? Yung pera nyo sa GCash, okay? Yung pera nyo sa GCash, pag hindi nyo in-invest, may ibang pupuntahan yan. Okay? So sana, mapuntahan man lang something that can help build your future. I mean, not all of it, but part of it. So that's something that, anyway. Any reminders for our investors here, DJ, for your GCash ATRAM investors?
One of the top investments of this, one of, diba? Alibaba is owned by Lazada. Sorry, baliktad. Lazada is owned by Alibaba. And a lot of people, very crazed in terms of the 3344 mga sales, diba? A lot of people add to cart. This is one of the funds that allows you to do the reverse. You add to, add to GInvest, this fund, so that you earn from the ones that you add to cart in.
Yeah. Roundabout way. And Alibaba is part of the consumer part, no? That's a
diba?
thing.
Yeah.
So, Alibaba owns Alipay. Alipay owns GCash. So, balik nyo lang.
Diba? If you're using it, you might as well earn from it.
Yeah. So, those things and everything. So, again, like I say, money you don't invest is money you end up spending. So, you might as well I'm not saying not to spend, but also to start investing. And now there's an opportunity for you to be able to do that. So if you've been using this, you invested in 4 days, you see it in your account. They even give you, I love what you've done, the interface, the UX. There's this, the chart that telling you. But ito maraming questions sa akin, and I guess you can answer this one. For consumer and tech, sabi nila, laki na tinaas. Okay pa ba pumasok? Yan. This question, are you seeing in the chat, no? Ang taas, kasi because of the chat, the chart, nakita mo talaga, ang taas na ng growth, no? In the last few months. And then people saying is, okay pa pumasok? What's your say in that?
Randall, ganito, we've been looking at the fund since 2018. We released it in 2020. So, confidence level of making sure that this will be something that will continue to grow and continue to make money for people, mataas. Because we understand how INVESCO runs the fund. We understand how good their track record is in finding all these trends na parang wow, ang galing nila mag-time even. One of the things we recommend for a lot of people is not to time to peso cost average, but if you're able to time really well, then you get really big returns. And that's what we've seen from this fund. Parang there's not a year that this fund didn't do really well in good years and even bad years like last year. Crazy amount if you invested when we launched this fund and then you took it out 1 year later, 100% returns. Not saying that's gonna happen in the future.
Past performance
is not indicative of future performance.
The finance is talking. Okay.
Diba? But at the same time,
kung naka 100% ka, assuming na bumaba na coming years, okay pa din yun. If you average your last 5 years, that's still gonna be a good growth.
Diba?
At saka, anong option mo? 0.05% in your savings, diba? 0.5%.
0.1%, mga ganon.
Pababa na siya.
Oh my gosh, I was looking at time deposit rates this morning and I was like, depressing. Savings account 20.25%. Time deposit rates in a year's time is only 0.4%.
Less 20% withholding.
Less 20%. Pa yan, I'm talking in gross terms. So it's very depressing. So looking for investments like these. Very timely, relevant.
Very clear lang tayo. You have to have a long-term perspective because it's growing now, but it doesn't always have to be growing every year. I mean, you might see declines and stuff like this. This is the nature of that kind of an investment. So be conscious lang. So I know a lot of people kasi ito problema sa consumer behavior. Kumikita, blah, 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 blah. Tapos nagkaroon ng decline, magagalit. So again, you know what you're investing to. So don't just invest because, yes, I guess I'm investing because I want to see growth. But it's not always going to be there. There's going to be corrections. There's going to be changes. There's going to be shifts. Great, the INVESCO guys are great, but they're only human. They also make mistakes. And, they might not be able to capture, or they might put their faith on a particular sector that pwede may mangyari. Okay, so again, just be careful lang when you do the investment. Pero you think long-term perspective. You align it with your objectives. You're saving anyway. Let's say I want to buy a house in 10 years. Then you have 10 years to wait. Or I want to use to add to my retirement. You have 25 years. And then that's a long time for you to wait. Or, or I want to add on to this, you can actually use these kinds of investments to finance the education of your children. And you have a 1-year-old child, then you have like 16, 17 years of waiting. So again, there's a lot of opportunities for you guys here. Right?
And long term, we believe in the story of these funds. Parang you emphasized it, right? It should be viewed long term. And these funds are really good stories long term. And yeah, diba? And we believe that there are other drivers of growth in the future other than these two. So watch out for our future funds. Medyo nagpa-plug na.
Meron ba tayong, are you guys gonna, di pala tayo, kayo, meron ba kayong ilalabas? Are there new funds coming out that are more in this flavor?
Actually, we're transitioning one of our current funds into one of a long-term investment themes. If you know the ATRAM Global Equity Opportunity Feeder Fund, we're shifting it towards something that has the global tech angle. It has the global consumer angle.
More index type.
More diversified, but it has all these good themes.
Right.
So we'll be fully invested by the end of this month into that new fund, that new target fund. So if
you intend to put it out in GCash also?
As soon as we are able to talk to GCash about it and get them excited about it, for sure, we want to bring it
look
into GCash.
Look at your experience, diba? Who would have thought that people would be so into consumer trend type of an investment, diba? But we're seeing right now, she said 80% are going to the technology and consumer versus 20% going to the local options. No? So, and even with a higher entry level, diba? With a higher entry level. Okay, so that's something you want to take a look at. So we're gonna announce it here. So guys, so we're gonna grab DJ again. Let's talk about the new product and hopefully talk about your investment. So ATRAM, thank you very much. You guys have been great in doing this. I'm a big fan, and I've always been said that I'm a fan of a lot of financial service company, but I like.
Thank you, big fan of you as well.
I like the way you guys thinking. You guys are so ahead. You guys are so, obviously you guys are very young the way you do things, and that's the way to do it. And now we're in GCash, and then later on we're going to be even expanding the portfolio for those things. And I like it because you set the trend. So other companies, if you're watching this, do what ATRAM does. I mean, get your products out there.
They're starting.
Because if you did not do that, they will not do it. Okay, that's the thing. You started the trend. You guys are a great, groundbreaking company, and I'm invested with you. I invest many in the companies. I've been very, very happy with you guys also. All right, so that's it. So thank you very much. Again, if you will not subscribe to this channel, do subscribe. Medyo in-depth discussions tayo lagi dito. Okay, wala pong hype dito. But we have in-depth discussions here, and hopefully, take it. My recommendations, for clear, I invest in tech, the tech fund. I invested in here in the consumer fund. Okay, I've invested in even the smart index. I've invested. Not that I have a lot of money, but I want to try. I want to see these things, and I love the environment that I can have easier access to these kinds of investments. I just want to see more investments coming in. So my recommendation for ATRAM, come up with more groundbreaking type of investments for us Filipinos, so that we have better options. And thank you.
That's our goal.
Thank you for giving us global exposure. I mean, that's something. And global exposure for 1,000 pesos. I mean, you can have global exposure with many other funds, but not with 1,000 pesos. Okay? You can only do it here. Right? So thank you, DJ. Thank you, ATRAM. Thank you, GCash.
Thank you, Randall.
And this is not a paid video, okay? But it will help if you subscribe to this channel, you share this video. It's going to be very, very helpful. Bye, guys.
Bye.